Income from the units of mutual funds specified company section 196A. The applicability rate of 160. The person responsible for buying a non-corporate resident or a foreign company income in respect of the units of the mutual fund. To respect specified in section 1034D on the specified company the fund and 1035 shall be at 20% plus such charge. However, applicable to the health and education says 4%. However, the agreement referred to Section 91 or Section 90A1 applies to the payee itself. The assessee would has furnished a tax resident certificate referred to Section 94 and Section 94A. As the case may be, then the tax therein shall be deducted 20% of the rate of the rates of income tax provision in such agreement, such income whichever is lower. Tax reduction. The tax shall be deducted at the time of credit of such income in the account of payee at the time of payment, therefore, by the mode whichever is earlier. Whether any such amount income is credited to any accounts were called suspense accounts or other income accounts. In the business of the when the banks have accounts of the person liable to pay any income, such credit shall be deemed to be the credit of such income to the accounts of the payee and provision of the section will apply accordingly. Meaning of a non-resident individual being a citizen of India, a person of India origin who is a non-resident person would be deemed to be an Indian origin of he or either of the parents or the grandparents are born of the Indian within India. Income from unit section 196B. A person responsible for making the following payments in offshore fund shall deduct tax at 10% plus such charge wherever applicable plus health education says 4% at time of credit of such income to the account of payee at the time of payment thereby in any more maturity area. Income in respect of the unit section under section 115BA and income by the way of long-term capital gain arising from the transfer of such units. Income from the foreign currency bond whereas the Indian company section 191 96E. The person responsible for making the following payments to a non-resident has to deduct tax at 10% tax charge, whichever is applicable, plus education says 4% at the time of credit of such income to the account of the payee at the time of payment, thereby the mode whichever is earlier. Income by way of the interest or dividend in respect of the bonds or global deposit received for section 115 BAC. Income by way of long-term capital gain arising on the transfer of such bonds or global deposit received. Income of the foreign institutional investor specific funds of the security section 196D. Applicability of the TDS. A person responsible for making the payment respect to the securities referred to section 115AD 1A. The foreign institutional investor has to deduct tax of 20% right. Even if a specific fund referred to section 104D has been deducted 10% plus a charge whichever is earlier plus the health and education says are 4% of the time of credit of such income to be the credit of such income to the account of the payee at the time of payment, therefore any mode whichever is earlier. However, an agreement referred to section 91 or 90A1 applies to foreign institutional investor. The FIA has furnished the date of tax or residency certificate referred to section 90A4 or occasional 90A4 as the case may be. The tax therefore shall be deducted 20% or at the rate of the rates applicable by the Indian tax providers as agreement for this income whichever is lower. Enhancement of the rate of surcharge 25% or 37% the tax payable is non-applicable or case a tax deductible at 196D or income. A surcharge and the health and education section would not be applicable to specified fund respect of income received from securities referred to section 115AD. Non-applicable of TDS. No reduction shall be made in respect of income by interest referred as 194 LD specific fund or FII. Income exempt section 1040 on the hands of specific funds. Income by of capital gain arising from transfer securities referred in section 115AD payable by the foreign institutional investor. Summary of the withholding provision related to the non-residents given below. These are the provision discussed the details in the following chapters mentioned below. Salary concessional rate or section 115 BAC or normal slab times the individual has exercised the option to shift from the default tax section. Section 192A premature withdrawal of EPF aggregate more than 50,000 more 10%. Section 194B income by way of winning of lotteries, cross puzzles, card games, other games, or any sort of gambling, betting on any form of natural which is aggregate amount paid to a person greater than 10,000, 30% to be deducted. 194B income by way of winning from an online game 30%. Income by way of winning of an horse or a horse race where amount aggregate amount is paid more than 10,000 30%. Income 194E income referred to section 115BAE payable to a non-resident sports person associated with the entertainment with the 20%. commission etc. on the sale of lottery, which is more amount payable to a person greater than 50%, deduction, collection and recovery of tax. In section 194 LV, interest payable by infrastructure debt fund to a non-corporate, non-resident or foreign company 5%. Interest paid to any interest income received or receivable by the business trust on special purpose vehicle to one unit holders 5%. Distribution of any dividend income received or receivable by a business trust from the special purpose vehicle excising option to pay tax on concessional rate as 115 BAE and to its unit holder. However, the SPV is not excising the option to pay tax on the concessional rate. Under Section 115 BAA, dividend income would be exempt in the hands of the unit holder and the tax would not be deducted in the source. If not, the 115 BAA it's been excised, then 10%. Section 194 LBA Clause 2. Assessment and trust and political parties and other specific functions. Section 194 LBA 3. A distribution of any income received from the renting or leasing or letting out any of the real estate directly owned by the business trust to the unit holder in India non-resident at the raised in force. Section 194 LBB. Investment fund paying income to the unit holders other than the income from exempt section 1023 FBB at the rate in force. Section 194 LBC. Income respect of the investment made with the securities trust explained in the section 115 TAC at the rate. Section 194 LC. The income payable by Indian company or business trust to a non-company foreign company respect of the money borrowed in a foreign currency from outside India and the loan agreement from the 1st July 2012 to 30th July 2023 by way of issue of long-term infrastructure bond during the period of 1st July 2012 to 30th November 2014 by way of issue of long-term bonds including a long-term infrastructure bond between 1st October 2014 to 13th June 2014 be approved by central government respect of the money borrowed 5%. Outside India by way of rupee denomination 5%. Interest payable by an Indian company or a business trust to a non-corporate, non-resident foreign company in respect of money borrowed by way of source outside India, the way of issue of any long-term bonds or rupee denomination bond 1st April 2020 and 6th June 2020, which is listed on the recognized stock exchange located in any industry international financial services 4%. Interest payable by the Indian company or a business trust to a non-corporate, non-resident foreign company in respect of the money borrowed by it from a source outside India by way of business issue of any long-term bonds or a denomination bonds of 1st April 2023, which is listed only in the recognized stock exchange located in any of the international financial service 9%. Interest payable to Indian company or a business trust to a non-resident, including foreign company, in respect of the rupee denomination bond issued outside India during the period 17 September 2018 to 31st 2020. Since such interest exempt on 10(4)(c) is not taxable, tax deductible. 194 LD on the interest payable between 6 June 13 and 30 June 2020 and the rupee denomination bond and the Indian company and the government securities between 1st April 2020 to 30 June 2023 and the municipal deposit securities of foreign institution investor of the certified financial investor 5%. 194 non-withdrawal of the cash exceeding 1 crore where the receipt is in a non-corporate society and higher threshold limit is 3 crores applicable withdrawal 2% amount exceeding 1 crore. In the case of a resident being not filing return of income for the past 3 morning year, the previous year, which time limit is 139 as expired, the sum shall aggregate amount of cash 20 lakhs during the period. 20% of the sum where the cash withdrawal is greater than 20 lakhs and less than 1 crore and 3 crores which is received in the corporate society 5% the sum where the cash withdrawal exceeds 1 crore and 3 crores for the received to corporate society. Any sum payable to non-resident at the normal rates. Income on the units of mutual funds specified in section 1023D on the specified company that found section 1035 payable to non-corporate, non-resident foreign companies, where DTA applies to the payee if the payee has furnished TRC and the tax therein shall be deducted 20% at the rates and rates income tax provided and aggregate such income shall 20%. Income of the units of mutual funds and UTI purchased the foreign currency, including long-term capital gains and transfer of such unit and offshore 10%. Income by of interest or dividend of bonds of Indian company, public sector company sold by the government and purchased of the non-resident in the foreign currency or GDR respect of 15 AC, including long-term capital gain or transfer of bond GDR payable non-resident 10%. 196D.
income of the foreign institutional investor from the securities not being income by of interest section 194 LD capital gain arising of security 20%. The DTA applies to the payee and its payee has furnished TRC when the tax thereon shall be deducted 20%. And the rates and the income tax provided such a loan agreement at the income whichever is lower. Income by way of securities not being an income by way of interest referred to section 194 LD capital gain arising from securities 10%, 10%, 20%. On the baggage rate has been increased by surcharge. However, the applicable health education 4% except for the deduction 196D in the case reserved fund. Miscellaneous provision recovery of tax respect of non-resident from asset. In the case of the person entitled to the income arising from any business connection in India or from any property in India, though or by any shares or source of income, and though transfer of capital as and substituted in India is non-resident, tax chargeable thereon where in his name and his name of this agent who is liable for represented assembly may be recovered from the deduction under any of the provision under Chapter 18B. Further, any arrear of tax may be recovered also in accordance with the provision of Income Tax Act for any assets of the non-resident which are or may at the time come in force. The provisions are within the guidance of Provision Section 196(7) or 67. Recovery against assessee property in the foreign current countries. Section 228A. When assessee is in default or are deemed to be default in making the payment of tax, tax recovery officer may, if the assessee is in resident in a country being a country in which central government has entered into agreement for the recovery of income tax under the act and corresponding law enforced in the country as the property of the country forward CBDT certificate drawn up by him. Section 222. Thereby, CBDT may take such action thereon and may deemed appropriate having regarding the terms of the arrangement of such country. Similar, the government of other country as any authority under the government may send the CBDT certificate of recovery of the tax due under the corporation corresponding law being enforced. Having the property in India and CBDT may forward such certificate to the tax account officer. Having jurisdiction over the resident within such provision, such property is situated for the recovery of such tax. The tax recovery officer can proceed to recover the amount specified in the certificate by attachment and sale of assessee movable property. Arrest the assessee from detention, pension, appoint a recovery of the management and movable property, and in charge of remit such amount to CBDT. Substitution statement for non-resident having a liaison officer. A non-resident can operate in India through the branch or liaison office and set up other get an approval from the Reserve Bank of India. Since that branch to constitution permanent establishment of non-resident, it has to file the return of income. Such a non-resident is required to file a statement in the prescribed manner section form 49C to the residing officer having jurisdiction within 60 days from the end of the financial year, providing the details in respect of activities carried out by the liaison officer in India during the financial year. This requirement has been complied with every person being a non-resident having a liaison office in India set up in accordance with the guidance issued by the RBI under the Foreign Exchange Management Act. The statement of a particular financial year should be filed in the 30th May of the succeeding financial year, electronic from the digital service. For example, the statement 5th financial year shall be filed in the Monabi for 31st May. Further, the statement has been verified by chartered accountants or by an authorized signatory, another person authorized by a non-resident itself. Furnishing of information of documentary by the Indian concern section 285. There shall be a reporting obligation on an Indian concern through it is the Indian assets are held by the foreign company entity. For the purpose of determining of any of the income assessed or arising in India under section 911, income in Indian concern has a furnished within the prescribed period and prescribed income tax authority the information of documents in prescribed manner. If any shares of interest in a company or entity registered in the incorporated outside India derived directly and indirectly the value of substantially from the assets located in India referred to the explanation 5 section 911 and such company as entity holds directly and indirectly such assets in India through its Indian concern. Information has to be furnished section 49D electronically within the period of 90 days from the end of the financial year in which transfer as shares or interest referred to takes place. Therefore, the share in yeah, the share as the interest has been affected directly, indirectly, transfer of rights of management, control in relation to the Indian concern. Formulation has a formulation section 49D within the period of 90 days. சும்மா எனக்கு பிடிக்காது The purpose of determining any income accrued arising in India, Section 9(1), India has to furnish within the prescribed limit the prescribed income authority information and documents prescribed manner. Any shares, interest, or a company entity registered in corporate outside India derives directly, indirectly value substantial from assets located in India, referred to Section 5 of 911. Such company entities holds directly, indirectly assets in India through their Indian concern. Information has to be furnished Section 1490 electronically within 90 days from the end of the financial year in which transfer of the share or interest referred to the above takes place. However, if the shares or interest has the effect of directly, indirectly transferring the right of the management and control in relation to the intent concern, information has to be furnished in the 1490 end form and within the period of 90 days. If any of the income tax concern fails to furnish information or documents of the income tax authority, as may be prescribed under Section 6, me directly that such Indian concern shall pay by way of penalty under Section 271G 2% of the value of the transaction respect of which such failure has been placed. If such a transaction has the effect as directly or indirectly transferring the rights of the management control in relation to the concern, or 5 lakhs rupees in this case. Rule 114D prescribes the time limit of information and documents to be furnished under the 285. Statutory agent of non-resident 163. According to this 163, an agent in relation to the non-resident person includes a person in India who is employed by on behalf of a non-resident who has any business connection with the non-resident from or through whom the non-resident is a recipient of any income, whether directly or indirectly, who is a trustee of the non-resident. Any other person who, whether resident or non-resident, has acquired a capital asset in India by the means of transfer of the job. So non-resident. The first four classes stated before, the person sought to be assessed as an agent of the non-resident must be necessarily be in India, wherever it need not to be so in the fifth case. Thus, in the case of who is trustee of a non-resident. Thus, a non-resident may be treated as an agent of another non-resident. The appointment of the agent may be made at time before or after the expiry of the relevant previous year. On the agent of non-resident may appoint under the section even if his date of such appointment non-resident is not alive. According to the provision of the section, the transactions are carried out in accordance with the business through a broker in India, and the broker do not deal directly with him or behalf of a non-resident principal, but deals with those non-resident brokers. Such non-resident brokers can carry out his transaction in ordinary course of his business and cannot as a principal. The broker in India cannot be treated as a statutory agent in respect of the income arising of a non-resident from such transaction. Thus, their bona fide hedging transactions take place through the broker in India and the foreign broker acting as an undisclosed principal. The Indian broker cannot be deemed to be agent of the foreign principal. For the purpose of section 163(1), the expression business connection shall have a meaning assigned in the explanation to clause 1 and section 9(1) of Income Tax Act 1960 were explained in 163(1). Before a person can be treated as an agent of a non-resident, he must give a reasonable opportunity being heard by the assessing officer as it's a liability to be treated. In certain cases, the income received by one person can be assigned in the hands of another. A person who is liable to the assessed on behalf of a person because of assessment of the real recipient in the income and prospective assessing. In the case of the income non-resident who is deemed to accrue or arise in India under Section 190, agent or non-resident includes a person who is treated as an agent under Section 160 would be considered as a representative asset in Section 160. As per the prescribed 161, every representative asset shall be subject to same duties, responsibilities, and liability as the assessee, and tax shall be levied upon and recovery from him in the manner to the same extent, and it will be leviable upon the recoverability of the person represented by him.